Welcome to Clear to Close LLC. I'm your host, Steve Lachance with Integrity Mortgage, and I'm here today with a guest of mine that I've had on the show before that I really enjoy working with, Jason Kern. Jason, designated broker from Kern Real Estate. Welcome.
Thanks. Great to be here, Steve.
Glad to have you here.
All right.
Today we want to talk about, do you really need 20% down to purchase a home?
Yeah.
And I would answer that question with, it depends.
It always depends.
Yeah, give you that wishy-washy answer that it's going to depend on your particular situation, because we have both been in the situation where we've had somebody that is qualified for perhaps an FHA loan, Federal Housing Administration. They're putting 3.5% down, well qualified under that program, no problem whatsoever getting the loan, and they make an offer on a property and they don't win. And that would be because in that particular situation, there were other buyers making offers going conventional with perhaps 5%, 10%, or even 20% or more down. And when you're in that competition situation, that gets really difficult to answer. And what I don't like about this is not just that we're not able to get some of those buyers qualified, but what's happening is we're taking buyers that are in that FHA approval and trying to fit this square peg into the round hole by making it work somehow conventional, so they appear to be more competitive in that offer. And quite frankly, they're not. They're now that we've got them, yes, 5% conventional, it's working. It's going to be a stretch, and it's going to be difficult. And anything doesn't go quite right, it's going to be a problem.
For sure.
What are you seeing?
One of the big pieces that I see is really, just before the formal application of the loan, buyers are looking at ways to be as competitive as possible, but also everybody's got their own context and they're in their own specific position. And we said at one point in a past conversation that I've never seen two transactions be the same. Yeah. Every single one is different, and in fact, I would go as far as to say that each person is in a different situation in a different context, meaning that I can work with a buyer for several months, and their situation changes, that grows over that time. Right. So they could be more competitive in the beginning and less competitive at the end, or vice versa. Right. So keeping tabs on that, and part of your position is making sure that the loan that they qualified for in the beginning, that you've got a pre-qualification letter for, is the same one that they could still achieve, based on taxes or based on pricing changes or things along those lines. So, so the 20% piece is kind of a variable, as you say. It depends, because you've got a bunch of different factors. One is, the program that they're using. If they're using a conventional loan, and they've got the war chest or the money set aside to be able to put that 20% down, then they maybe can get into that conventional loan, and that would be your part of your conversation.
Yeah, my favorite thing to do, and I think is most important for clients, is to make sure that we've explored all our options. There's usually more than one program available for you. So if someone says you're qualified for FHA 5% down, great. What are my other options? Yeah. No, that's what you're qualified for. Well, hold on. There got to be other options. If that's the case, you would qualify for an FHA. If you haven't served in the military, then perhaps VA is out of the question. If you're looking in a rural area, perhaps rural development would be an option for you. But all of those things have to be explored. And when we look, part of my job, my role when I help a client get approved is to say you're qualified for FHA conventional, and within the conventional there are a couple different variations of it. There's a 3% conventional program. It's actually 3 ways to do a conventional loan at a 3% down payment. All of that, again, sounds great. If it doesn't help you win the offer, that's different. So we don't want to necessarily say, well, you're qualified for a home ready program at 3% down. If I'm a listing agent going, all right, I got 4 other offers, what's this home ready thing? I don't even know what that is. That worries me. Let's go with this guy with 5% down. That's the fear I have. But I think the only way it's going to help you and your customers in the process is to know, here are their options. Because you may have somebody that makes an offer on a property and there are no other offers. House has been on the market for a few days, and that seller is very much willing to accept any offer. Right. And why not go FHA at that point if it's going to make more sense for them financially? Right.
One piece that I hear a fair amount as particularly first-time home buyers, but oftentimes second and third-time home buyers, is there's sort of this barrage of these different, FHAs and RDs and RD directs and, all of these different, what you and I would term as programs, but there's a sort of an information overload as someone's walking in the door and walking in my door or your door.
Yeah, and again, I think that not knowing those different variations, one is a skill set flaw, perhaps in the loan officer or the agent, or it's just doing them a disservice by not knowing what your real options are. For me, the greedy part of making sure that customers know their options is reflection back later. So closing the transaction, everyone says, yeah, you did it, you closed it, that's awesome. If that client's looking at those papers 3-4 years later, I don't want them to go, I wonder why he didn't tell us we could have done this. Now that's a bummer. I could have gone this route. Why didn't he tell me? Probably not going to come back and use me again. Or if I've done that to the customer, they may not even want to use you again because of that. So it's really important to me that they understand what their options are and then why something should be used or shouldn't be used, even though they know it's an option.
Right.
Because again, quite often, I love the Maine State Housing Program. I think it's a terrific product, but it doesn't always fit the right needs. And there may be a case where they find the right home, and I'm telling them it's not going to work now, Maine State Housing, because you're over the ratio limits. But it still works FHA, perhaps, or conventional.
Right.
So, but they need to know that. Why did we not go that route? Because they could have had a $3,500 grant, and
yes.
It's years later where I don't want someone to reflect back saying, no, we didn't get a good deal when we did that.
Right.
It's real important.
I feel like there's a balance there between both of us where, if I teach a first-time home buyer class,
yes.
so that a lot of, people that come out of that class have just this bedrock foundation understanding. And when I see them, I say out there in the wild, when I see people who've been through that class, whoever's taught it out there in the wild, I know because they're asking really great questions. So they've got some background information to fit things together. But on the other side of that, I also see first-time home buyers in particular and people who are buying homes get hung up on one thing. Well, I have to have a Maine housing loan, or I qualify for the RD Direct, and that's the only one that I can use. And what I've found is there's a balancing act between giving them the information, that without sort of that sort of information overload, like the fire hose of like the FHAs and the RD Directs and the conventional and like what even is a Fannie Mae, right? Like and why does she matter to what I'm doing here?
Introduce her to Freddie Mac.
Right, exactly.
Yeah.
So understanding, kind of catching a glimpse of what each of those are, and knowing what those options are, and knowing what they want to accomplish, and sort of threading that through. That's the sort of artistic piece. Yeah,
and it's tough when you have first-time home buyers in particular, which is why I can tell when someone's taking your class, when I'm talking to that person, they have some, they've had some education here. They understand a lot of the terms and the lingo. Yeah. It's still so much to assimilate, though, at once. Right. And all the years I've been doing this, the guidelines change every minute of the day. As we're talking, somebody out there, Fannie Mae, Freddie Mac, they're changing the guidelines as we speak.
Not only Freddie Mae and Fannie Mac, but you know what I mean?
Yeah, that's how we all say them. We all know it's silly names.
Yeah, not only those two, but you've got a list of other ones that are also always changing. I mean, Maine Housing is changing. RD Direct is changing. RD is changing, and there's a difference between the two. And what's that? And again, sort of threading that needle so that when someone wants to buy a house, I've seen it happen. It's kind of like a fly hitting the windshield. Like I don't need any more information. I just want to go to sleep in my house in about 6 weeks, right?
and that's the truth. That's what a lot of customers want. They just get it done,
right?
And I get that, but there's a certain level of knowledge that's absolutely necessary.
Critical.
And the reason for that is there are no two. We've talked about in a previous show that no two deals are exactly alike. Every situation is different. I've had customers with identical credit scores, identical debt to income ratios. All their numbers are nearly identical. And the way it works, because we talked about how guidelines change all the time, and how do you keep up with that? Sometimes you can't. So we use underwriting engines when we approve someone. We've actually an underwriter is going to put their loan scenario through an automated underwriting engine. Mm-hmm. I don't think it's really necessary to get into the technical names of what they are, but the most popular is DU, or Desktop Underwriter. And that engine is going to analyze that situation and give a recommendation to an underwriter or loan officer such as myself at the very beginning of the transaction and at the time of approval. What that can result in is one scenario that looks to be identical to another, and that engine recommendation is saying no to this one and yes to the other one, or vice versa. that's where I think a lot of the confusion can come into play as well, because the algorithm that's being used to approve somebody isn't just an underwriter looking at guidelines and saying, okay, it's FHA, they meet this score, they meet this score. It's not just a checklist. It is deep diving into their situation, and it will look at credit history, proportion of balance, credit utilization, all the things that are taken into account, in addition to reserves, how much reserves or extra money that you have left over. All of those things are taken into consideration, and you may have a loan that doesn't work, but throw in a little extra cash into reserves, and now maybe it does. So the understanding of different programs is not where it ends. It's understanding your situation and how that can affect the outcome or the results of that product.
Right.
So very, very different. Now, there's some manual, if we get a no through the engine, there's still manual ways we can override that if it makes sense. But overall, I can't stress enough that understanding that every situation is different, and every program that you may qualify for won't necessarily get you the house under contract.
Right. Yeah. Which is a hard part.
That's where you've got that's so hard for you, because you're on the front lines, and I never forget that, because you're on the front lines. You're out there literally in the trench, and you've got to now negotiate that transaction with somebody. Yeah. So walk me through that. What does that typically look like if you've got a buyer now that wants to put an offer? I'm kind of putting you on the spot here, but you've got a buyer that says, all right, we like this house, we want to put an offer. What's the next step?
Really, it's a conversation that includes a bunch of things, and there's a little bit of an art there, because you don't, I would say it's similar to a juicer. If you've got a juicer on your counter, and you know that you put veggies and fruit and things in here, and you get the juice at the other end, some people really want to know okay, there are beets and cabbage in there as well as the apples, and it's going to come out as the juice. Some people are like, you know what, I just want the healthy juice. Like, get me the juice. So there's kind of an art to make sure that, we've got a bunch of printed disclosures and a bunch of material to get through as a matter of course, and they're there for a reason, because somebody along the line didn't understand what was happening. So there's a disclosure. This is your relationship, and this is, whatever. This is lead paint, and this is, so there's an art to getting through all of those pieces. So, and keeping somebody sane while getting them that information. And some people are like, sounds great, give me the signatures.
Sign, yeah.
And other people are like, well, hold on, let's talk about arsenic wood. So, and they want to get it like into the finer points. I'm happy to cater to each of those, but again, to your point, it's the process is really sort of slowing that down, which is a challenge in a fast moving market, because you're view, right. Yeah. Reject.
Yeah, I saw the house today. All offers are due in by 5:00, which it's 4:45. Yeah. We've all been there too.
And I said in another conversation that we had, the 16 hours between "Hi, I'm Jason" to "You're under contract." Yeah. There's a skill set in saying, oh, like, we're all very excited. Like, I'm excited at that point, right? Like, these are my clients. I want to serve them well. I love home ownership. I think it's a beautiful, critical thing that's available to all of us, in different contexts. But also, like, all right, dial it back, tap the brakes here a little bit. We've got to talk about what my relationship is with you as the buyer, and what your relationship is with the bank, and what you qualify for, and how that fits together with this offer. Right. Because the last thing I want to do is get someone into an offer and under contract, and having paid for a general building inspection, and getting underwriters involved and getting appraisers involved, and get to the point where they need to get the final approval for their loan, and there's some qualification or there's some condition that they can't meet, and they're done. Yep. Like, by that point, we've got 25 people involved with title and inspectors and appraisers and officers and me and them. I mean, so the quicker we can get everybody on the same page and on rails to get to that closing point, the better off we are. So to answer your question, the big piece of that is there's a moment in time where I have to say, all right, quiet room. We need to have a conversation about what all this means. And I've got it boiled down to, I do these three ring binders. I've got it boiled down to 2 pages. My entire career as a real estate broker, right? I've got it boiled down to 2 pages of checklists. And I go through, and I literally, I'm geeking out on the list. Like, I know that you're chomping at the bit and you want to write these things up, but there's a moment where we have to have a conversation about what my agency looks like, what your relationship with the bank looks like, what terms you can really afford, because number one, I want you to love the house a year afterwards, and I want you to refer me or use me again, and I want you to have a great experience here.
Yeah, I love the way you do the analytics on your with your clients, because I've sat in some of your classes before too with more advanced investor type stuff, and wow, you've got it down pat. You really know your stuff, and being able to break down and analyze a particular property and say, okay, this is what you're looking at, and this is what the value could potentially be. Here's what I'm seeing for comparable sales in the area. And help them guide them where a safe and proper offer would be, but also looking at it from, if it's an investor, what does the cap rate look like? What do the numbers look like on this property? Is it going to achieve your goals for income? Those kind of things.
Yeah, thank you.
Which I think are so important, because quite often, as a buyer myself, I get wrapped up into the emotional part of everything. I want it. I've decided mentally I'm an impulse buyer too. So I've decided I want this. And then you're a voice of reason at that point too. Remember when you told me this is what you were looking for? Let's back into these numbers. Let's see what it looks like. And real well. And maybe the numbers are just great, but it's no different than when you're writing an offer and that buyer is qualified for both FHA and conventional. You're going to help me and help them understand that you have more than one option here. If we go into it with an FHA offer, here's what's likely going to happen. If we go into it with a conventional offer, here's what's likely going to happen.
Right.
And then they can make the final decision on how to present that offer. And sometimes not every customer follows that advice, right? They don't. They right. have to, it's like riding a bicycle, maybe skin their knees a couple times before they go, oh yeah, okay,
absolutely.
Well maybe I should be listening to Jason here.
Yeah. I try to, maybe it's a double-edged sword, but there's a very intentional moment that I work towards, which I call my late night FM DJ voice. And I try to just be as calm and quiet as possible. I really work on doing a lot of listening, so I can understand the perspective, and I can cater the message to meet that. I don't always, it's an art, it's a craft. I don't always nail it, but when I can nail it and get that understanding for myself of what the need is, and then give that back as a process to get someone to a point where they get into a home that they love for a long period of time, or that they're confident that it's a good investment, even if they're having to make some sacrifices to get there. They understand what those risks are and what the sacrifices are to get them there. So even if they're paying more than it's listed for because it's a competitive offer situation or whatever that is, there's the baseline understanding of why they got there, like why they're doing that and making those things happen.
Right.
So, as you so eloquently said, it's an art.
It really is. It's one of those things that even over all the years I've been doing this, we're continuously refining in how I teach people. We're in such uncharted waters lately with the programs and the way everything is set up recently to be so competitive and such a short inventory that I've had to switch gears. I remember hearing buyers call me, and just so happens there's 5 other offers today. It's been on the market for a year and a half. And because I'm looking at it today, well, it was a time where I'm like, don't listen to any of that. That's probably not even true. And 9 times out of 10, it was not.
Right.
I've had to change what I tell people, because 9 times out of 10 now, it is very much the truth. Right. You've got to be on your game. And if you are ready to make an offer on something, you've got to be able to pounce on it right away. So the advice and how we do this changes over time too. It has to keep morphing to not just the borrower situation, but the market conditions at the same time.
It's a growth. I mean, you definitely, fortunately for us, there's always a problem to solve, right? Like
exactly.
It's a very different market than it was in 2008 or 2009.
Well, that's so true. And do you really see this changing and shifting this year?
I don't see it changing and shifting this year. I see, it will always change. It will. The market is always evolving, and we know that because our documents to support us are always evolving. And it's always growing. So we're always growing to meet that demand. And like I said, luckily there's always a problem to solve.
Yeah, what we should do is talk about the market in an upcoming episode here, and talk about, let's update customers on what the market's been doing. Because I think now, early 2022, we're going to start seeing a shift. And not a shift where suddenly more inventory, but we're in a different market where rates are different, and a lot of those first-time buyers are getting kind of pushed out of that. And there's some tricks to helping them as well.
Yeah, it's definitely inching up.
Yeah, Jason Kern, Kern Real Estate, designated broker. Thank you so much for coming on. I always enjoy having you on.
Great to see you,
really
Steve.
Appreciate it.
Yeah, good to be here.